Okay, folks, welcome to Thursday Night Futures Live. Another Thursday. They go like this. And every Thursday I say one trading day left to go because we're going to go over the weekly charts tonight, as we always do every single Thursday night without fail. Rain, sleet, or snow, we go over the weekly charts. However, one trading day left to go. Before we do that, I want to take a quick look at Netflix in the after-hour session. The last I looked, hammered. Strong earnings, but their forward-looking guidance not looking good. We're going to go over a weekly chart. It's not going to mean much because it's going to be a static chart. We'll probably use Thinkorswim. Maybe TrendSpider will pick this after-hours action up. But we'll come back to this. We're going to go over tonight, for those that are new, we're going to go over the weekly charts to see how we're poised out to close. That's what we do every single Thursday. Again, we're going to go over a few charts, BAC, Netflix, and what else did I have up there? There's another one. I'll figure it out. And we're going to go over some stock chart requests. I have some member requests I need to go over first. And then if we have time left, what we'll do is we will go over and take requests from the viewership. So let's get to it. Let's bring up the weekly charts. Oh, before I do that, I want to talk about China. Let's go to some headlines, because China is a problem, and a big problem. I haven't spoke about it all too much of late, but the headlines are just wrought with headlines out of China, and the fact that the president just signed an executive order basically warning Hollywood, social media, that if you are complicit with helping the Chinese Communist Party propaganda machine in helping their propaganda undermine democracy in Hong Kong, you can be thought of as an agent of the Chinese Party and stand to lose your property, stand to lose or stand to be charged. So it's broad ranging. I'm going to go over this executive order in the coming days and weeks because it's so broad and so powerful that there are going to be consequences. And oddly enough, yesterday you had, after the president signed the executive order, Twitter went down. Twitter blocks tweets on China human rights abuse stories as AG Barr decries Silicon Valley collaboration with CCP. That's the Trump administration lashing out. That's not the article I wanted, and I may not have it. Anyway, the Twitter went down last night. Anybody with a blue check mark could not tweet because they took over the accounts of Elon Musk, Joe Biden, and Barack Obama. That, in my own humble opinion, is a signal by the Communist Chinese that if there's war, it's coming to you through cyber, social unrest. That's my own opinion. I have no evidence, but social unrest, which we have. And frankly, if China goes after the Taiwanese, such as what they've done with Hong Kong, that's war. That's war. And you can bet that the markets are not going to like it all too much. And in particular, what we'll be looking to trade is Yang, which is spiked up. We need to see a pullback here on Yang, pullback higher lows, and a base get formed. We've traded this on or off. We've had some success with it, but you know what? We're still in a downtrend. I'm not ready to get long right now. I'm waiting for all of this to continue to roll out. And in fact, there's another headline here. Wake Island was a big launching pad for the United States back during World War II in our Pacific War. Now what we're doing is we're expanding massively our airstrips over on Wake Islands between Hawaii and China, mainland China. And we're using that as a launching pad, as a potential launching pad into the South China Sea, because this island is out of striking range of the missile defense systems of the Chinese, the anti-ship missile defense systems, and expect a lot of activity on this island in the coming weeks, months, years. Let's go to the weekly chart. And I'm going to be talking more about this China issue in the coming days. I first want to get educated more on that executive order. Let's bring up our weekly charts. And what we like to do here is, almost screwed up tonight, is spend some time and get a feel for how we are poised to close out the trading week. Okay, I need to redo that. Sorry, folks, for the delay. Okay, slow internet tonight. Okay, so yield curve. We're going to begin with the yield curve. This is actually a monthly view. And the yield curve is implying that yields are inverting, or potentially inverting yet again. We are technically in a steepening mode, but you can see what we have here is topping action on the yield curve. And so long as we don't get a continuation move higher on the yield curve, a steepening of the yield curve, the markets could continue to rally here for the foreseeable future. This is being managed by the Federal Reserve right here, right now. This is the main reason why the markets are rallying. Cheap money. Bonds continue to rise, and I warned about a potential pullback in gold over the past several days. In fact, we took some profits yesterday in our gold mining trade, the GDXJ. We're still long. We're going to be looking to buy more, but on a pullback. And what I've been concerned about is, let's get rid of this. What I've been concerned about is some topping action on the TLT, the 20-year bond ETF. Now, if bonds pull back, that means yields are rallying. What happens if yields begin to rally? That's going to put some pressure on, not stocks, but commodities. The dollar might rally, and that will be a concern for us given the fact that we have a significant exposure to commodities, silver, gold, or the miners, I should say. Now, taking a look at yields, let me bring up comments here. I haven't said hello to people. There we go. Franklin, TA. I didn't have my my chat box up here. Himanshu, I haven't seen you in a while. Very volume is dropping off, so you got to be careful with Very. I still like it. We'll go over the charts of Very and BRZU. Don't let me log off without going over them for you, please. As a matter of fact, let me make a note. Oliver, hello. Will, hello. Hey, Gary, how you doing, brother? Rick, what's up? Jedi, good to see you. Significant divergence in the XLK. Diverging against what? We saw this in late February. So let me know what I'd love to get your opinion on this and check out the chart of the XLK. We'll bring that up. We're going to go over that anyway in a moment. But I love divergences. That's how you use your indicators. Not this overbought, oversold stuff. All right, what else do we have? Virgin. After hours breakout, it rose again. Anthony, I look like an All-American? Mission accomplished, brother. Die-hard American. No apologies. All right. All right, so the 10-year yield, weekly basis. I'm getting a message from YouTube, not enough. If you see buffering or whatever, I apologize. YouTube's apparently having some issues. 10-year yield, very weak. But I want to bring up a different chart for a moment. And this is not it. All right, so here's the price action on the 10-year yield. We're at the lows of the week yesterday. We were well off the lows of the week. And you might be asking, what's with this guy? Why is he paying so much attention to the yield? Because it matters. It matters. If you're long of gold, it's very sensitive. Gold is very sensitive to yields. The reason why gold is rallying is because of where yields are at right now in the debt. So if you see a rise in yields, YouTube's getting hacked. God forbid. JBLU and American Airlines in merger. Huh? Is that after hours news? I didn't see that. Okay. So what we're seeing here on the 10-year yield, and this is why I was actually influenced by the weekly chart 10-year yield yesterday to book some profits on the gold mining trade. Make it real. Take note of your RSI, higher lows. Take note of your Stokes, higher lows. All right, so while we're pressing lower, and I think today we made a new weekly low. No. Flat versus the prior week. So in short, one trading day left to go. However, no new weekly low yet. Will we bounce tomorrow? I don't know. But this is one beaten up chart. And we haven't had a bounce in a while. This was the week. I remember this week so clearly. The first week of June. We were talking about the tug of war, potential for a breakout. We got it. Federal Reserve stepped right in there with a sledgehammer, knocking them yields back down again. Tips. Treasury inflation protected securities. Federal Reserve, Treasury, everybody. There's no inflation. Then why are institutions, because it's not mom and pop buying 100 shares, why are institutions buying tips if there were no inflation? Take a look at housing costs. Take a look at rental costs. Take a look at healthcare costs through the roof. Take a look at agriculture beginning to break out. Corn, wheat. Look at metals, even steel rallying. Copper in fuego. The dollar weekly chart. continuing to base here. We're holding support. I want to go to a daily chart of the dollar really quick. See the potential for a W formation. Bottoming action. We're holding support. Last seen back in, well, technically last seen back here in June. But prior to that, March, then December of 19. So this is pretty strong support. Dollar longs are going to try to defend it. But ultimately, they're going to fail. Sorry, folks, I have a dry throat. And the dollar will crash. And we'll be very, very long of the gold miners. But right now, it looks as though they're going to rally the dollar short term. This is still a weekly chart. Here, take a look at RSI on the dollar. Higher lows, Stokes hooking up, bullish reversal bar on the day. This is an undercut double bottom, meaning we took out the lows of June the 10th yesterday. For today, we rallied and recovered that lost real estate and closed there. Most importantly, closed there. So I think what they're going to do is, you saw a lot of weakness in gold today in response to this price action. And I think that they're going to try to rally the dollar. They're going to probably try to rally yields. That means a sell-off in bonds. The VIX holding steady here. It actually closed up on the day. Let's go to my annotated view. So we are holding the 200 period moving average. I don't really trade off of moving averages all that much, to be honest with you. I think it's pretty much hyped up. Day traders like it because it kind of makes sense. But in terms of swing trading, I don't put too much stock on support levels being the 200 period or the 20 period, whatever. Maybe on a monthly chart, like a 100 period moving average, a 150 period moving average, that's got more historical value. I'm more in terms of, I favor historical support and historical resistance levels. So that's my shtick. Now, taking a look at the VIX daily chart, there are storm clouds out there. We have a higher low possibly on RSI. We are holding a support level, and that is the 25 mark, 26 mark. And as long as we stay above it, this market is under, it's got that sword of Damocles right above it, any given time. But we'll remain long. We're not short. We were short earlier in the week, but we made those profits real, moved to the sideline. Now, the transports are having an outstanding week. Really, gosh darn impressive. So, an incredible week, up over 5% on the week. And we kind of predicted this would happen. And we even got long of Boeing earlier in the week. We sold it a few weeks ago at 204, bought it back the other day. It pulled back today some. And the reason why, and before I leave this chart, I'm going to go to another chart in a moment. The reason why we got bullish on the transports was that the theory that we had going into the week, because every Saturday, what we do is we do a weekly wrap-up with members. It's called the Week Ahead Commentary. We go over the closing price action of the markets. We lay out a strategy for the coming week. We do the analysis I'm doing now. However, the week is in the books. It's a snapshot in time. That way we can determine what are we going to do for next week? What are we looking to do? Are we looking to get short? Are we looking to add to positions? Are we looking to lighten up? And we'll do that on Saturday. We'll talk about our watch stocks. And in fact, I do a deep dive on the watch stocks with members. If you're not a member, you don't care to be a member right now, you just want to get our best stock charts, which is a very high level view of the charts that we're watching for the coming week, enter your email address down below, anywhere on the website. You'll get the best stock charts, or on YouTube, and you'll get the cursory overview of what we're looking at, and that comes out Saturday, Sunday. All right, so Dow Transports rallying up into very, very stiff resistance. All right, but I want to applaud the transports in their ability to rally through 95.71. It's an incredible feat. It really is. The question is, do we break out above the June highs, or do we put in another lower high? Jury's out. I would love to think we're going to break right through, going to all-time highs. Don't know. Let's take a quick look at why we were looking at the transports. I caught a glimpse of KSU, Kansas City Southern. Take a look at this chart. It was just not breaking out. It was having a good day, one day, and the market was down, and KSU was up. I said, what's up with that? That's the market sending you a signal. Now, it's extended here, but this is a beautiful, beautiful chart. I mean, the weekly chart, forget about it. It's beautiful. JB Hunt, I know, reported today. JBHU, I believe it is. Oh, JBHT. What's not to like? Unless they reported after hours. I can see you guys typing in space, for Christ's sake. Now I got to take a look at it. Great day. New CEO. JBHT. I believe they reported this morning. Or maybe not. No, after hours. Really nice price action here. Up about $5. I'll take that all day long. Very nice. So JBHT. Transports are on fire. Let's check out Love. Down today. Weekly chart. All right, we're off the highs of the week. Okay, that deflates my balloon. Let's move on. Now, who said that there was a divergence on the XLK? Was that was Jedi that said that. All right, so now I have to pick off. All right, regarding XLK, I'm looking at the Silver Cross Index. Sector bullish per. I have no idea what that is. What is that? Every day I learn a new thing. All right, I'll take a look at it. You're using the moving averages. Okay. All right, Dow Jones weekly chart. Off the highs of the week. Again, do we break out above the June highs or do we fail? Jury's out. IWM, the small caps, a good week so far. However, 50-day move or 50-period moving average acting as a declining ceiling. Perhaps one day left to go. We'll see what happens. Maybe we rally tomorrow. I like this. I like we're holding support on Ultimate Oscillator, that 50 mark, holding support. RSI looking strong. So the small caps looking good. I hate this. S&P 500 weekly chart, just shy of a percentage point. What's the high of the week? We took out the highs of June, couldn't hold it. But again, do we fail here or do we break out? Volume not wonderful. One trading day left to go. The banks, a good week. We expected this. Volume good. Stokes higher lows. The banks looking good into the back half of the week. All right, the XLK. All right. You're using the 20 period moving average, exponential moving average, and the 50 EMA. On a, what time frame? Daily chart? You can see how often I change my moving averages. I do not, here we go. I do not change these very often. I'm not seeing a divergence on a weekly basis. I'm not sure where you would get a divergence from. You need to explain that to me. I don't want to tie everybody up here. I'm not quite understanding the divergence. Or, yes, Oliver, please smash the like button, everybody. Thank you. We'll come back to this. If you get back to me with more guidance on that, Jedi, I'll come back to this. But anyway, technology, stalling action here. Could break out, could break down. Very extended on Stokes. Semis, new all-time high this week, but we're off the highs of the week. Volume dropping off dramatically. But it's good to see light down volume. Biotech. I think the biotechs are going to break out here. In fact, they already have broken out. Here. Very good price action on a weekly basis. Volume could be better. Higher lows, Ultimate Oscillator. Good stuff. We'll be looking at the biotechs. Emerging markets. If yields come in, or if yields rally, I should say. If yields rally and the dollar rallies, expect emerging markets to weaken up a bit. You can already see the weakness here on a weekly basis. We have an outside reversal bar. I just get that feeling that yields are going to spike up. You can feel it. energy. And if you think about it, the banks are rallying. Gold is pulling back. Everything that's sensitive to yields moving up higher, they're reacting, except yields just haven't moved up higher yet. It's a bet. That's all. It's a projection. Energy. What can I say? I've been bearish on energy for a while now. And this is not the chart. Is Norris on tonight? He's big into energy, man. He's got a big position going. Beautiful higher lows here on energy, weekly basis. Stokes, I want to see them flatten out a bit. But the Pimp Mac Daddy chart here is this. Here's the formation. Love this flag formation. Really liking energy. It's definitely on our watch list. Oil, forget. Gold. All right, so we're seeing stalling action here. And I love gold. We're barely holding on to that 1800 mark. No new weekly high. Topping tails last week. Down week so far this week. Lower highs on ultimate oscillator. Here's a divergence for you. Let me go to the annotated chart. So here we have our breakout, right? But here is what is a bit concerning for me. Take our crayon out. A little bit weak of a line here, but you could see that while we're breaking out to new higher highs, ultimate oscillator has been putting in lower highs. Very extended here. I think we could quite possibly correct on gold. Daily chart. Lots of testing at this 1800 mark. We barely held on to it today. Lower highs, lower lows on Stokes. Choppy price action, Stoke RSI. Down volume dropped off today. That is a positive. But this chart looks extended to me. I would not initiate a new trade just yet. All right. Let's take some chart requests. And this segment is brought to you by our friends over at TrendSpider. And they are basically my spell check for technical analysis. And there's a discount code down below. 35% off, the best price on the web. You need to use that link, though. See, I didn't see how it closed today. Did it close? I know it was down. Did it close down today? We'll take a look at the chart. Yancey, hey, how you doing, brother? All right, let's get some chart requests in here. All right. Very. All right. So if I'm going to go over this, I need to disclose that we do have a position in Very. We opened it yesterday. It was a volatile trading day today. We held firm with it. And it did rally back off the lows of the day. Now, I like the weekly setup here. Would I go all in? No. Not at all. Especially with the VIX firming up. Remember, the VIX is out there lurking, right? You don't want to get overly weight of any one equity or overly weight the equities as a whole at current with VIX hovering around that 30 mark. Now, VERI is putting in a W formation on Stokes. No breakout yet. So when the Stokes are trading down like they are right now, right? They're trading down below, let's say, 30. And if you read technical analysis for dummies, they'll say, you're supposed to buy a stock when Stokes are down below 30. Ridiculous. You're supposed to use the Stokes to identify when the trend is beginning to change, right? So I like to use the Stokes and buy a stock when I begin to see higher lows, because it'll appear firstly on your Stokes, secondarily on price. So it's an indicator that, you know what, things are beginning to change. And what influences the Stokes is the fact that while you may be down on the day, you're seeing buyers come in and bid the shares up off the lows of the day. And that influences your Stokes. So that's a change in sentiment. It's a forward-looking indicator. And I use it quite frequently. A little bit more lagging at this juncture is RSI. Not much to do here with RSI. We're focused right now on price and volume. Volume today, let's bring it up here. And this is one of the reasons why we entered the trade yesterday. Look at this volume, right? Volume is dropping off dramatically. So when I see volume bars like this, I go, yikes. I go crazy. I'm not buying that stock. Stay away. Stay away. However, when I see sequentially declining down volume bars, that's the market sending me a signal. It's saying selling pressure's waning. Look further. Look further. Take a look at your price action. Bottoming tails. On your candlesticks. Where are those bottoming tails? At prior support. Here are the Stokes again. Beginning to hook up. Higher lows. MACD histogram. Flattening out. Beginning to lose that downward momentum. So I like this setup here. But do we go buying all at once? No, that's not what we do. We nibble because we could be wrong. We got to go into a trade assuming we're going to be wrong, especially when you have your Stokes down here. When you're buying the Stokes, when they're down below the 30 mark, 40 mark, even the 50 mark, when they're down below that mark, your probability, if you're going to get shaken out, the probability of getting shaken out is going to happen down there because you still have sellers or longs that are just not confident enough yet that the selling is over and they sell. Right? There's no shame in it. It happens to me all the time. Right? There's no shame in it. So it's just the probabilities. With the Stokes down where they are right now, the shares trying to find a balance or a bottom, you're going to have your up days, you're going to have your down days. It's going to be volatile, especially when volume is dropping off. And the spread on the shares between the bid ask was about a dime. Whenever I looked, it was about a dime spread. That's a lot of volatility. So I like the shares. Still, but it doesn't mean I'm not going to be wrong on the trade. Now, using a raindrop chart, raindrop charting, again, 35% off. You're only going to get it with TrendSpider. Down below, 35% off. Raindrop charting, this is a mixture of VWAP, volume-weighted moving average. All right, so this is the usage of volume and candlestick charting. And this is what I call a pregnant lady, right? I love green pregnant ladies with the belly on the right side. That tells me, because the AM session is reflected on the left side of the candlestick, the afternoon session of the day is based upon the right side of the candlestick. You could see by this candlestick that there were a lot of buyers into the close. They were bidding the shares off the lows of the day. That is accumulation. We like that. It's stealth accumulation. They're buying weakness and they're moving the shares up higher because the spread, again, on the bid-ask is so weak. So longer term, I like the shares. BRZU. Again, this is another one we're long of. We plan on adding more. Let's do our normal thing. Let's take a look at a monthly chart. Now keep in mind, the president of Brazil just contracted COVID, corona. Yet, BRZ is moving up on the month. We're breaking out. Weekly chart. Nice support level here. And you can see I didn't want to do that. I want to go with weekly chart. I want to overlay monthly. There we go. That's what I wanted. All right, so we have no significant resistance levels above, with the exception of my manually drawn one. Take a look at your Stokes. Rising. RSI, higher lows. Daily chart. We're on the verge of a breakout here on a daily basis. I wouldn't buy it right now, even though I own it. I'm not going to talk my book. Were I looking to open up a position right now, I would not do it right now. I would wait until we break out and retest this resistance level. In short, what I want to see is a breakout, then a confirmation that this resistance level, after we break out, then becomes support. So I still like BRZU, but again, on a breakout or a pullback to the support level here, 79.44, it's extremely volatile, not for the faint of heart. But if you like commodities, this is a great ETF. All right. DKNG, that's DraftKings, right? Woo! We talked about this one the other day. It's a beautiful week. We've broken out on a weekly basis and on a daily basis. I mean, can it be bought? No, not me, not my style. Too much risk. and we closed right at resistance. So, and here's the breakout. It actually broke out yesterday. Today we did a retest. That was the time to buy it. I should have had an alert set up here. On a continuation move through 33.05, that was the time to buy. Now, if we pull back and retest 33.05, that's a good entry point. That's attractive. And I think that we are going to move up higher here. It's a good looking chart. Baidu. Did Jedi ever get back to me? Jedi, no, he never did. Not that I see anyway. All right, Jedi, if you still want me to go over XOK, I will for you. All right. Baidu. Daily chart. Let's go to a monthly chart. Hey, I wouldn't trade Baidu. I don't trade Chinese stocks anymore. We have a successful breakout on a monthly basis, but we are well off the highs of the month. So what the market is telling us is that we have resistance above at 128.88 and then 135.82. We have higher lows on our Stokes. Stokes look beautiful. You know, my opinions be damned. When I see a pretty chart, I'll say it. There's no way I would buy this stock, but I do like the Stokes. I don't like the topping action, selling pressure above, higher lows in RSI, weekly chart. Outside reversal bar on the week, and we've closed back down below support. I don't like this stock. One trading day left to go. Maybe we'll rally back tomorrow. And if we recapture 128.60, then I would breathe, if I were long, I'd breathe a sigh of relief. But it's not looking good. Daily chart. A reversal day today. Question is, do we fill the gap? Are we going to pull back? And you have both lines trading down below the 50 mark. I have a rule. I don't like to buy stocks when both lines on daily Stokes or weekly Stokes are trading down below 50. They're declining. That means you're losing momentum, and rallies tend to fade. So be careful here. I would not buy the stock. I don't like it. Too much risk, not enough reward. And the headline risk coming out of China, there's going to be retaliation for the executive order. I'm telling you right now. That Twitter thing last night was nothing. Nothing. All right, you guys are talking about MVIS. Oh, Oliver, you own the puts. 127 puts. You're in the money on them, Oliver? America, brother. These colors don't run. All right. MVIS, Microvision. Beautiful chart. Very, very nice chart. Weekly chart, very frothy. Those of you that know me, you know exactly what I'm about to say. Obviously, one trading day left to go. You want to see the shares of Microvision close above this resistance level here, 2.1. Let's round it up, 2.17. You don't want to see a fade on the week. It's a good looking chart. RSI nice, Stokes nice. Daily chart. We're trading above the third standard deviation Bollinger Band. We're probably going to get a pullback. The play here, I think, is this. Is that if we close out the week above this resistance level, and for those of you not familiar with automated trend lines, let's do this. Just a click of a button. Click. I'd be looking for a pullback. If we close out the week above this resistance level in red, next week I'd be looking for a pullback and a retest at around 2.19. Let's go to a daily chart. So I'm going to set up two alerts here. So the first one, I'm going to show you why. I'm going to overlay on a daily chart. This is called multi-time frame analysis. I want to overlay weekly resistance, currently support on a daily chart. I want to know when we retest that support level next week. I also want to know if and when tomorrow or the next day or next week, whenever, we hit this support level at around 196. Keep it active for a few days. I want to know really quick. And there we have it. There are my alerts, right side of the screen. We're good to go. Set it and forget it. Until they hit these triggers, I don't care. They don't exist to me. What else do we have here? Did I skip anybody? ACIU. My God. What can I say here? This is crazy. All right. So forget the daily chart. It's ridiculous. You can't buy it. I wouldn't buy it. Okay. So what I would do here is next week, watch for a retest. at that support level at around 770 per share, thereabouts. I like the setup here, weekly breakout. Stoke's a little bit weak, but if we pull back and bounce off of the support level, next week, you're going to see these Stokes begin to hook up. Not a bad chart. It's way too extended for me right now. I mean, we're dancing on top of the third standard deviation Bollinger Band. To me, it's not. I can't even think about buying it. SPCE, no. I mean, it jumped today on. Kills me. I just booked profits on this too. And no, we didn't get out up in the 20s. I don't know. It was a headline event. Let's check out the weekly chart, how it poised to close. It's not a bad chart. It's a good chart. It's a good chart. I'm pissed off that I booked profits too quickly. I'd like to see consolidation here. Right here. Because this was a resistance. As a matter of fact, let's lower this a bit. There we go. That's better. It was support back here and resistance back here in May. Then resistance back here earlier in the month. Now we've broken through. Wouldn't it be nice to retest that support level? And that's at 20.05. And that would be my game plan. What else do we have? Jedi abandoned me. All right. We have 1 minute left to go. And I think that's, Boeing. BA. What do you mean Boeing's weak? Well, let's take a look at the chart of Boeing. All right. This goes back to what I was saying earlier. Let's do a weekly chart first of Boeing. And again, for disclosure purposes, we're long of Boeing. Small opening position. We'll be looking to add more. All right. So let's talk about Boeing. What's right, what's wrong. Now, the first thing that jumps out at me is my higher low on a weekly chart. This is a weekly chart. Higher low. Look at your Stokes. Flattening out. Nice little triangle formation going on there. Volume. Beautiful volume. You know, there's still going to be sellers of this stock because they're non-believers. Daily chart. Now, I will say this, because we don't speak our book here. Would I go buying more shares tomorrow? We have a bunch of people on here. Shouldn't I do a certain financial channel thing of pumping a stock? We don't do that. We have integrity. All right, so what don't I like about the stock? We broke out yesterday. Today, we failed to hold that breakout point. That's a breakout point failure. Some call it a bull trap. Call it cupcakes. It doesn't matter. It's not good. So do I like to see it? No. But you're going to expect to see that as you build the right side of a base. It's just what you're going to see. You have a lot of overhead supply here. Your Stokes are going in the right direction. RSI, okay. Volume today was light. But relative to pre-pandemic, it was fairly sizable down volume. So I still like it here. I'm not aggressively bullish on it. We're profitable on it. Would I go adding more tomorrow morning? No. If we recaptured this current resistance level tomorrow in blue, I would consider it. Assuming that we close there, not intraday. And with that, folks, why look at the BA weekly charts? Because we do multi-time frame analysis. What we like to do is you can't, it depends upon the type of trader you are, right? What time frames matter to you most. Now, I don't day trade, right? I'm way too analytical. I like to get up early or be up late at night and just analyze charts. That's what I do. I'm a nerd. So what matters to me are my daily charts. But before I can even take a look at my daily charts, I need to know where the stock has been to identify where the daily chart might be going and what are my probabilities of success. If you're looking at your daily chart to identify where stock may be going and you don't have an idea of as to where the weekly chart is, whether it's trending higher, lower, diverging, weakening, your risk of your probability of profit, your POP, is greatly reduced. So that's why I take a look at the weekly chart. No, I go 1 hour on Thursday nights. Can you go to 420, Bob? Can I go to 420? Super sticker, sure, man. Anytime. Make her pretty. Lithium. Trader went up. All right, we'll make this the last chart. I believe that's lithium. Oh, it's not. My bad. You bet, Franklin. Technically, BA is not weak. It's a misnomer. Are you so, Andy? Let's define what you mean is weak. So you mean like today's price action, or do you mean on a quarterly basis, a yearly basis? What time frame are you looking at? What's your style? And I'll address your question. I really like questions like this so I can be engaging. So if you could clarify that for me a little bit, that would be great. Franklin, you're a gentleman. Thanks for always joining in. Have a great night. LiveNet. Andy, I'll come back to you if you're going to respond back. Okay. LiveNet. There's a glimpse here. So I just want to go to a monthly chart really quick. All right, not a lot of data here. A lot of new issues out there. All right, so this is one of the values of TrendSpider. I was looking at stockcharts.com. There's a couple of different ways of looking at the charts. All right, so when I first looked at the weekly chart of lithium, I'm seeing this, right? Which is not bad. But I'm also seeing this. And after this sell-off, what that represents to me is the possibility, not the probability, of a potential bear flag setup. Now, it's only a bear flag if it breaks the lower band of support. So this chart is a little bit concerning to me, which is why I went to TrendSpider as well. Because I use as my spell check. So our indicators are doing well. My only concern, volume is coming in good this week. 3 consecutive up weeks with decent volume. My only concern is a potential bear flag setup. Now, looking at TrendSpider, I'll draw my own trend lines here. Okay. Let's see how accurate I am. Bam. I think I'm more accurate than TrendSpider. But it's my ego. All right. So either way, we're consolidating very nicely along the lower band of support. When would I buy? I think you could buy it now, to be honest with you. As long as you're going to use a stop loss right below this bear flag setup. So right below this week's lows. If we made a new weekly low next week, I'd be out. So as long as you're going to keep your opening position small, not a bad opening trade. Your risk is minimal, assuming that you're going to use a stop loss right below the week's lows. I wouldn't add more until one of two things. One, we broke out and closed above this resistance level here at around 672, or more ideally at 750 per share. If we close above that mark, then I would look to add more on a weekly basis. You can do it on a daily basis, but if you fade, you may want to take some of those shares off. You've been in it since 582? Okay. Is that accurate? So a down day today, holding the 20-period moving average. I like the stock. I think there's a good chance it's going to move up higher. Now, is this related to the lithium commodity play? I'm taking it from the symbol that it is. It may not be. I'm just reading into it. All right, Andy, I'm going to read you and your reply. Like this entire week, it's going sideways. Every time you try to get it back up to 190, it drops back down. Okay? We already know the airlines cut orders. Yes, this week was all good news, but their answer orders and so on, but the stock just won't move. Okay. Oh, so it is a lithium play. Okay, thank you for that. So it's a good chart. I like it. All right. Let's go back to Boeing really quick. Let's talk about that. It's a worthy conversation. I like the engagement. Let's bring up my annotated view. So I'm going to help you right now with rationalizing why it's doing what it's doing. Okay? And earlier I mentioned that I like to use weekly charts. I like to use monthly charts as well. Now, what you need to keep in mind here, and this is the value of multi-time frame analysis, is that going to the monthly view, you step back from this hodgepodge of jumbled noise, right? All you have is data. Data. You're getting, the only picture you could draw from this is that there's a bloodbath and we may be building the right side of a base. However, this is a better story. And I went over this chart right before the break many months ago. I did a YouTube video on it as well, this analysis. And I warned that we were probably seeing a head and shoulders setup and that would probably fail. Did I predict $89 a share? No. But I did predict we were going to break. So look at what you're dealing with. In fact, well, they're not showing me a whole bunch of trend lines here. So let's take our crayon out and do it manually. All right, so take your crayon out. Now, as I'm doing this, I don't care about where the price is. I'm focusing on where there was prior resistance and prior support. That's all I care about. I don't care where it is right now. It doesn't matter. So you're wondering why you have historical... Oliver, thank you for the super chat. Thank you, my friend. Oh, super sticker, right? Super sticker. So you wonder why you have this topping action here. Well, keep in mind where you have overhead supply, right? That's the enemy. Those are the enemies of longs right now. And who owns Boeing? Mom and pop own Boeing. 25 shares, 50 shares. Institutions own Boeing. And they're selling. Because a lot of big money bought in March and they think the rally is over. And guess what? They may be right. So they're selling right now. So as we near these resistance levels, you're going to see them distribute their shares because they don't believe they're going to get through resistance. They have guys like me on staff saying, okay, where's the resistance? Get me out at that resistance point. If we break out, we're probably going to I skipped over the support level here, or resistance level. We're probably going to rally up to 223. Let me update this. Okay, so if we manage to close above 193, you said 190, close enough for government work, right? If we close above 193 spot 25, we consolidate for a month or two. We're going to rally up to 220 per share. After that, it's 240 per share. After that, 260, $20 increments. Boom, boom, boom. Now, there's a threat. This is an abnormal rally by any historical measure. Normally, you're going to get a pullback and a higher low and then a W formation is formed, then you rally off of that base. That's a nice sound base. But we don't have that yet. So I'm not planning on getting overweight of Boeing because I still question whether or not we're ever going to pull back, retest 160, 140, put in that higher low. I would feel a lot more confident on buying that pullback on a higher low and then beginning to buy more. And once we take out the highs of June, which was at 234.20, these shares are probably going to take off like a rocket because your W formation will have been completed. This will now become your pivot point. So what you want to see, ideally, here's the perfect world scenario for Boeing. Because guys like me don't like these charts. I don't like this chart. I think it's junk. It's junk. I want to see. Let's pretend that this is a retracement. And we put in, let's say we're going to hold. Let's make this red to represent down candles. And I want to see this support level here hold. And then what I want to see that was a crappy, here we go. Then what I want to see is a breakout. Once this formation is complete, that would be a beautiful setup for Boeing, longer term. And we still may get it. There's a very good chance that we still get it. So right now, I would stay small. Could we go shooting back to all-time highs in the next year or two without getting this scenario, this big pullback? It's quite possible. You know, things happen. Sure, it's possible. I mean, take a look at what happened back here in 2009. V-shaped recovery. Could that same thing happen again? Why not? I don't know at all. I'm just saying what I would like to see. And the reason why you're getting all this choppy price action is because of these guys back here. You have people that are out there that bought a long time ago. They've been sitting through this utter nightmare. They've held these shares for years. And what took years to build took days, literally days, to wipe out. And even turn a big gain into a big loss. And as they become not profitable, but flat, they want their money back. That's overhead supply. That's what you're dealing with right now. The key, if you're going to own Boeing, you got to have patience. You got to have patience. And with that, folks, everybody have a great night. Amerimigo. Yeah, you are late, brother. Have a great night. I will talk to you not tomorrow night, but over the weekend. Best stock charts. Hit the like button, share with a friend, and subscribe to the channel. Everybody have a great night. Oliver, thanks again, and be well. Smash that like button. Yes, thanks, Oliver. Be well.